Typically, when there is an undercut, look to the left. That's more important. Market is indisputably the most important. I would not discount any point in time, but generally look to the left and how the price has drifted towards the moving average, and then there is an undercut. Now, ideally speaking, if it's a reversal and not a pullback, it should have gone further below, breaking down the moving average, and it should have gone further below. And the very fact that there is an undercut shows a sign of presence of buyers coming in at that level, and they are trying to push the price above. Now, if you have studied Wyckoff's schematics, right, accumulation schematics and all that, in any consolidation, even if it's a shorter term consolidation, in any consolidation, these undercuts are typically done at the last moment before the stock begins its upside rally. So once an undercut is there, the chances are high for the stock to immediately start to move higher. And if you look at on the chart on the right side, right, undercuts only in an uptrending chart. If you look at the first undercut, right, the pullback to that moving average is much more linear. It's much more orderly movement, and there are not many big black bars, right, or the red bars. And then there is an undercut. So the next day, the opening itself is above the undercut bar, right? So as soon as the undercut bar's high is taken, it's a legitimate buy entry point, right? You can take some position over there, and then you mark the recent swing high as your pivot breakout point level and wait for that pivot point to be taken before you add further to the position, right? That's one way of looking at it. That's how I normally trade. Now, in contrast to it, if you look at the second undercut, right, the pullback to the moving average is fairly strong. The black bars are much more extended range, which means there is a lot of selling pressure. In those cases, I would not be in a hurry to buy immediately at the cross of the high of the undercut bar. I would rather wait for the pivot, the high to be reached, the pivot point to be reached, and maybe some consolidation around the pivot point so that I get the least risk that I can put in the trade for me to get into the trade. So you, as much as market is important and as much as the moving average where the undercut is happening is important, it's also equally important the context of what the price has done before it gets to this point level.